Jeremy Hunt's stealth taxes mean that certain tax allowances are reducing over the next couple of years. So it's never been more important to use them or lose them. This year, more than ever, tax efficiency needs to take the lead, so it's important to take action before the end of this tax year, which is April the 5th. There are various allowances and reliefs that we have available to us, but there are two which are seeing significant changes over the coming tax years, which is capital gains tax and dividends tax. Capital gains can be one of the most complex taxes, and lots of people end up paying more than they need. Capital gain tax will be owed on the gain of any asset, whether that be a business, property, or stocks and shares. Currently our available allowance this year is £12,300, but that will decrease post April the 5th to £6,000 and further decrease again 2024 to £3,000. So keeping this in mind, it's never been more important to take action as soon as we can. Payments from stocks and shares is usually paid out in the form of dividends. This is another area which we are noticing significant change over the coming tax years. On current legislation, the first £2,000 you receive is free of any tax. However, after this, the tax which is payable is according to your current tax band. So the basic rate tax at the moment is 8.75%, the high rate being 33.75%, and the additional rate being 39.35%. We saw dividend tax increase by 1.25% across the board in 2022. And from April this year, the tax allowance will be reduced further from 2,000 to 1,000. And then, as with capital gains tax, from 2024, this will reduce further to £500. When we consider these changes, it's really important to make sure that we are positioned in the most tax efficient way as possible. And this is by making sure that our investments are held in the appropriate wrappers to avoid any dividend tax.